Hi guys, and welcome to our weekly forecast video where we're going to take a look at the week ahead in terms of what is it that we are anticipating the market to do. So let me just point out a few things, guys. Now remember, the market, when price is being delivered, it's going to have phases, right, where it's gonna run for buy side liquidity, and it will also run for sell side liquidity. Now when we say we have to stick to higher time frame directional bias, what do we mean? We're talking about following through your bias from monthly, weekly, and daily, like what we covered. I think it's week 3 or week 4, the sequential daily, weekly, and monthly profiles. So now when you are in a bullish setup, and then you get to see days when markets turn bearish, as in strong bearish, such that you think that the market is now going to the downside. There is days that are going to be like that. Now always remind yourself, what is the higher time frame bias? What is the market trying to achieve by trading lower? And also remember, time and price delivery, two critical points, two critical criteria that you have to consider: time and price. Now if the monthly candle opens and you're expecting higher time frame, you're expecting bullish momentum during that month, and then you see the first 2 weeks of the month they move impulsively to the upside, are you still going to expect the same thing the remaining 2 weeks of the month? No. Price will definitely relook to what? To reprice in further moves to the upside. By doing that, by correction to the downside, by collecting more sell side liquidity. So now we are still bullish on dollar index, but you have seen a couple of days that trade lower. A couple of days that gives you that sentiment to say, I think market has turned. I think market is now going to the downside. Always switch back to your higher time frame bias. Switch back to that monthly chart and try to identify where is the market repricing. Where is the algo trying to locate more sell side liquidity or buy side liquidity. Now coming back to dollar index, right? Last week I didn't publish a weekly forecast. Now looking at what happened last week, ultimately we have seen price trading above 93.47, which was the target for this month, to say dollar is going to trade above those relatively two equal highs of March and I'm not sure what month is this, these two relatively equal highs here. Now once price has cleared the buy stops above that, you shouldn't be expecting price to keep pushing to the upside continuously without collecting more liquidity for that push to go probably to trade above 94.31, and ultimately we're seeing price trading above 94.799. So basically that's 94.80, right? That is 94.80. Now once you have this basic understanding, once you can be in a position to do such a forecast, such an outlook, to say, okay, where is the market going? Where is the IPDA likely to deliver the price? 94.80. Why that so? They're too clean. these two highs, too clean. What lies above old highs? Buy stops, right? So we got buy stops located at 94, just above 94.31 and above 94.79. Now, is price just gonna shoot up there? No, that's not how price is delivered. We are going to get ups and downs, accumulation, reaccumulation, accumulation, reaccumulation. That's how the market is going to deliver price. Now, enough of that. Coming back to our forecast, already I've highlighted that I'm still bullish on dollar, right? I'm still expecting to see higher prices, but for the remainder of this month, which is we're already in the last week of August, last week of trading, so expect huge corrections, right, as we head into Jackson Hole. Now, looking at the COT number quickly, right, the numbers haven't changed that much on the commercials and the non-commercials. We haven't seen any much of a huge move, even on open interest. Now, if you look at the commercials, they've slightly increased their short exposure by about 600 or so positions, and they've also increased their long exposure by another 500 or so positions, basically cancelling themselves out. Same applies on the non-commercials. Now, what does this tell us regarding the market? Last week of August, we are heading into Jackson Hole in September. We've got NFP next week. We've got initial job loss claims on Thursday. What do you anticipate the market to do? Monday, Tuesday, definitely we're going to have a move to the downside. We are going to have probably a reaccumulation phase where price is going to trade into discount. Now, when we come to the chart, where is that price point likely to be? 92.87, right? 92.87, 92.88. Why is that so? If we go to our weekly time frame, right, that's our equilibrium point of this old bearish order block, right, which was broken here. You can see last week is a breaker. That's a bullish breaker in terms of order flow. This is a bullish breaker. So price broke to the upside, and this week opened with a small protraction phase, and then price is shooting to the downside. So I'm anticipating price to find support right around this area here. On the weekly time frame, we're looking at 92.87, right? 92.87. We've already filled the fair value gap on a weekly chart. Now, if we go to the daily, you can see the daily fair value gap and the inefficiency, the imbalance in the market. So I'm anticipating dollar index to trade first to this level and find support, or if this level does not hold, guys, there's this fair value gap right here. All right, this fair value gap, this imbalance in the market is going to provide what? Support. And you can see that is all inside this old bearish order block, right? So expect this level of price to be sensitive when price trades lower. Expect 97.87 to be sensitive in terms of support, right? Yes, price can ultimately move lower all the way to 92.50, but I'm really not anticipating that unless, right, unless we get a bad number for initial job loss claims on Thursday, unless if we get a bad number on the crude oil inventory releases. So where are these numbers? Let's take a glance on the calendar. So Monday is done already. Tuesday, we've got new home sales for the dollar, that is, and the estimate is looking to be positive, which might push dollar higher, but it depends if we do get a positive number. But if you get a negative number, guys, lower than what is expected, right? If you get a negative number than what is expected, then expect the dollar to keep continuing with the downside momentum. We also have Wednesday, where we've got the crude oil, right? Wednesday, we've got the crude oil, and the forecast for crude oil is sitting at minus 2.367 million. Last time there was a minus 2.3. So depending on what number comes out here, if it's a negative or positive number, that's going to be not good for the dollar. A positive number is going to be good for the dollar. We also have core durable goods for the month of July, right? This number, I'm not anticipating it to change anytime soon. Now, Thursday, this is the crucial one. Thursday, we've got the initial jobless claims and we've got GDP. Now, focus, guys, focus, pay attention. We've got GDP and initial jobless claims on Thursday. Now, where is dollar really going to right now? This is Monday, right? This is Monday's candle on dollar. And if we are really saying the US economy is not going yet anywhere in terms of the recovery from this COVID issue, then those numbers, say for GDP or initial jobless claims, the estimates should have been lower than, say, what came out. But if the estimate for GDP is 6.7, right? Last month we had 6.5. It means they're gradually what? Growing. Initial jobless claims, 350k. Last time we had 350. That means this might not be good for the dollar. We need a lesser number here. How do you see the effect of the report on the currency? I'm going to open the jobless claims quickly. Now you can see here a reading that is higher than forecast is generally negative, right? Which means bearish, because it means more people are what? Requesting their employment benefits, meaning they're out of work. Now, with a lower than forecast reading, right, this is generally supportive of the dollar. So last time we had 348k, our forecast was 363. The actual number that in the previous was 377k, the actual that came out was 348. But still, we got a dollar that traded lower but eventually rallied by Powell's speech. So this coming 26th of August, the forecast is 350k, which is going to be negative in terms of previous release. If we do get a 350k release, right, expect dollar to trade lower, right? Now, look the coincidence when you look at the calendar. The same time we are getting the initial jobless claims is the same time that we are getting the GDP release, right? If the GDP number comes out 6.7, right, it's the one that's being anticipated, right? If it comes out 6.7, that will be a reading that is stronger than forecast, right? So that's generally supportive, which is bullish for dollar. If it comes out less than 6.7, that is going to be bearish, negative for the US dollar. So these two critical fundamentals for the dollar, they're coming out all at the same time. Take note. Expect dollar to find support. Firstly, around 92.87. If we continue moving lower on dollar, I'm gonna go to H4 now. If we continue moving lower on dollar, expect price to reach out into 92.50, right? 92.50 or this bullish order block right here. This bullish order block with its equilibrium around 92.67. Expect those price points to provide support. Number one, right here. Now, how do you validate that, say, 97.87 has been violated? A clear bearish candle close below. You see, like here. You see this close below. That's a clear technical analysis chart, technical analysis criteria that you can use to say 97.87 has been broken. You can see here this bullish move, close above and price rally, close below and we had a drop to the downside. So the way price action delivers price around 92.87 should give you a sign, should give you a clear picture of what price is going to do after. If we do close below 92.87, then expect the next support level around 92.68 for another push to the upside, right? If all this happens before Thursday, then anticipate the market to really find support on Thursday when we have the GDP and the initial jobless claims releases, because they're definitely going to be positive releases for the dollar, these two economic releases. Now Friday we also have Powell speaking. That's 4 o'clock. We've got Powell speaking, and then we also have what also do we have here for the dollar? Not much, trade balance and all that, but that's Friday already. You should know that Friday we do normally get a market correction phase or something. So I'm still anticipating dollar to push to the upside. I'm not expecting to see dollar trade below 92.50 anytime soon. If that happens, it means we have had bad numbers from those economic release from the United States. It definitely means something is not going on very well in the recovery process for the United States. So that's basically what I'm anticipating the market to do. I'm expecting 92.87, 92.67 and 92.50 at most to provide support this week for rallies to the upside on dollar index, which means that Euro USD, Aussie dollar, New Zealand dollar, I'm expecting those assets to trade into premium where they will find resistance and trade to the downside. So yeah, that's pretty much about it for today, guys. And if you haven't subscribed to the channel, unfortunately you're only gonna see this focused on Thursday, probably after New York session or so. And if you now get it earlier, Monday before NY close, just send us a message and we'll definitely give you the instructions on how to go on about that. So yeah, today has been really interesting. It has been interesting in the market, the way dollar has erased some of last week's gains, but I'm not expecting price to trade lower than 92.67 or 92.50 anytime soon, because if that happens, then we would have turned bearish. And I'm sure if you're in the mentorship, you know already this candle here is a bullish order block, right? So 92.67, which is the equilibrium point for that level, and you can see this tiny shaded area here. That's my H4 bullish order block, right? That's my H4 bullish order block, where I'm anticipating price to find resistance and push to the upside. So yeah, that's pretty much about it for this week, guys. And if you have any questions, you can send them in the group. And if you haven't subscribed to the channel, guys, I urge you to make sure you subscribe to the channel and have the notification icon selected, so that when I upload some videos or when I make some of these private videos public, you get a notification in your inbox. So yeah, that's pretty much about it. I wish you guys good luck and happy trading during the week. Thank you.